Traders, welcome to the afternoon session. Brian here, A Plus Setups. It is Thursday afternoon, February 26th, 2026. Today we're going to be talking about the CentreLine trading model. The CentreLine trading model is going to be the second of our two trading models that we go forward with in the future. So we'll have our flagship scalping model, which will predominantly be on Ninzarenko bars. And then we'll have the CentreLine method, which can be traded on minute, second, tick, range, those types of bar charts. I love trading this style. It's what I primarily use trading stocks and options for swing trading, this concept. And so we're going to walk through the CentreLine trading model and just describe what it is, what it's kind of designed to do, the components of it, and kind of timeline for when we think we'll have some improvements to the model. So let's go ahead and get started. The CentreLine trading method. Okay, it consists of several components. The first is the CentreLine method. The CentreLine is the same, it's this CentreLine right here, the thick red and green solid line. It's the same CentreLine that we use to qualify the jiggles on the Ninzarenko bars. This CentreLine right here strange. Won't let me highlight it. Wow, okay. All right, so this CentreLine is for the current chart. I currently have a 333 tick chart, and that's what this thick CentreLine is for. Another component of the CentreLine is the higher time frame CentreLine. The higher time frame CentreLine is this dotted line here, and it's set to a 999 tick chart. Then we have a third component to the CentreLine, and it's the lower time frame. And I think this is set to a 150 tick chart. So what the CentreLines actually do is to help identify higher lows and lower highs. That's it. We use the GAN high-low, the GHL color bars, to help us isolate those higher lows and lower highs. These color bars are wonderful for doing that. I've mentioned many times before that in options trading on the higher time frames, very seldom would I use any type of moving average. It was clear enough for me to see the structure and these color bars to determine, what the trend was. But the CentreLines may help isolate the trends more easily for you. Creates a very good visual. So that's three of the several components that comprise the CentreLine method. The CentreLine for the current chart, the higher time frame, which is the dotted line, and the lower time frame CentreLine set to a completely 333 CentreLine, a 150 CentreLine, and a 999. Now you can change these variables when we go through the indicator. You'll see where you can change the variables. You just have to get the higher to lower time frame aspect ratio right. And I use, a 2 to 3 to 1, 2 or a 3 to 1 aspect ratio. So 333 and we got a 999. 333 and I've got a 150. So somewhere in that ballpark. It's not exact. You can set these to your own preference. All right, so we know about the CentreLines. And Richard built a cloud in here which can be adjustable based on your preference. So the outer boundaries of the cloud are the calculation based on, I think it's a average true range is what he has factored in there. A percentage of the average true range, and you can change the density of the cloud, by altering that. So that's the CentreLine method with the GHL color bars. Now, something else that's integral to this is that may help you is the double stochastics. Okay, so in the double stochastics, it may help you to decide where you want to take action. So for example, in this uptrend here, we have a red bar pullback. That tells you that the pullback is deep enough to take action. You may wait till you get a red pullback and a double stochastics in the first pullback to identify the trade location. And then it's up to you on where you get in. You can let the bars turn back green again and then get in on the second. You can buy at highs, the highest red bar. There's all kinds of things you can do once you understand the concept. And that's what I'm trying to show you here is the concept. And you have the means to develop this, to your own preference. But the concept has been valid for as long as I've been trading. Now, so that's another component. So another aspect of this is you can use the cumulative delta. Again, if we're trading NQ, you need to make sure you're using MNQ data. So here we have, again, we're going to use this first pullback as an example. We're all green, 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 red bar pullback, double stochastics at the lower end of its range, and cumulative delta all green. So that gives you the setup there. Should give you the confidence to take a shot. That's where you want to take a shot at. It works the same on bearish trades. Here you have red, 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 a green bar pullback. We don't quite get to the upper edge. That would have been a nice one, but here you do. Green pullback, stochastics in the upper threshold. You get red bar here. That's a super good entry there. So you could get in on this, and that was a really nice push down. It's the same concept, just keeps repeating. Here's first pullback, red, 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 green bar pullback, stochastics, upper end of its range, red bar there, another great entry on the down move. It just keeps repeating time and time again. Now, this method here this is what I like to use to trade evals when I'm trading evals. I love trading like this because I don't have to be precise, and I can build into positions and add more contracts as things go my way. And this method here, you're more apt to get your 1-to-1, 2-to-1, or larger risk to reward moves, or reward to risk moves. All right, so we talked about the CentreLines as this. We talked about the GHL color bars and the visual aspect the GHL color bars bring to the model. We talked about using this double stochastics to look for threshold violations inside of the trend. And then we talked about adding the cumulative delta as another combination. Again, you're stacking things that have a tendency to work in the long run. Okay, so another component to this, the final component, is the bottom picking element. Now, the bottom picking element, should you decide to go that route, it requires a second data set. Here we have a 333 tick and a 100 tick data set. This 100 tick data set is there only so that we can tie the bottom picker panel to this data series. The only thing I've changed in the bottom picker panel at all is I make my my buys, I make those lime green and green for the different threshold violations for the bottom picker. I don't want to see the top picking component in this, so I make those gray. So those are the top picking elements there. These are the bottom picking elements. And I just have mine set for lime and green. And the input series is set to the second data set. You're like, well, why? The bottom picker, the way I use it in my own trading and have for almost 15 years, is in a multi-time frame approach. So we can use one chart to trade a multi-time frame method. And that's how we do it. We have this chart here set to a 333 tick with higher time frame center lines, lower time frame center lines, all on the same chart. And now we've got a bottom picker on a lower time frame that's tuned to hopefully highlight bottom picking components in the 333 tick chart. Because the way I use the bottom picker is, let's say for example, I am looking at a trend on a daily time frame. I will go down to the 4-hour or the 1-hour looking for a bottom picker signal. So I may have to go down, and most of the time I have to go down 2 time frames to look at a bottom picking signal inside of a daily trend pullback. So that's all we've done here is we've moved almost what I call almost 2 time frames down from this 333 tick and tied this bottom picking bar to that. The bottom picking bar only means something when this is in bull mode. It doesn't mean anything during the red time. You see them all here, it doesn't mean anything. You know, hopefully when we get to designing this, refining this model latter part of this year, hopefully we can weed these out. But here's what you're going to be looking for. Big pullback, you're way above the cloud, and you get a bottom picking signal here. This is telling you that this might be a really good spot to take a shot inside the trend. Deep pullback triggering the bottom picker, and look at what happened. Here's the second one, and look at what's taking place right now. So that's all of the elements combined together to make the CentreLine trading model, our second trading model inside of the Discord room. Now let's take a look at the indicators themselves. Here's the CentreLine. That's the version I'm running, 2.5.2. I've never changed the GHL high-low period. It always remains the same. It's always worked perfectly for me in the default setting. We want to show the center line. This center line is for the active chart, the current chart. And, you know, we want to see the up and down slope. Now, when you select the higher time frame center line, that is this aspect here, you have a lot of selections. You can do tick, range, or minute based. Just keep in mind of the aspect ratio that I talked about. The higher time frame should be 2 to 3 times, no more than 3 times higher in your current chart. So here I've selected tick, and when I select that, this becomes active. None of these, this doesn't come into play because we're selecting tick. Now, if I were to come up here and check range, then I could adjust this to whatever I want to. And that would be the higher time frame plot that would pick up. But we're going to stay with tick, and it's going to key off of this input that I just put there. And like I said, you can change that. Higher time frame cloud, if you don't like the cloud, you can just simply click that, check that off. You just have the higher time frame moving average. When you select that, you have all of these inputs that you can change. Let's put it back on. All right. Now here's the lower time frame. So the neat thing about this is that you can manipulate these. Richard did a really good job of putting this together and referencing other data sets. So here we have ticks set up. You know, I have a 150. It's like half the size of this. Again, you can see I'm not exact. It's just close. You want to tune your lower time frame average to something that makes sense, that captures the higher lows and lower highs. That's what you're trying to do. Capture the higher lows and lower highs. And it may take a while before you get the ability to tune your lower time frame so that you can accurately catch the ones that you want to exploit. So same thing here. You can, if you want range, if you wanted to change this to a, let's call it a 12 tick range bar. We've got range selected. Now watch the lower time frame. So there's a 12 tick range lower time frame average. And again, it's up to you on what you want to do. You might be saying, man, I really like that because I can take all of these. If the center line is green and this is above, we get a red, higher low, and then up, I'll take my shot there. Hey, that's what these tools are for. I'm just giving you concepts. We've got them designed so that you can build anything that you want to. You just need to spend time to do it if you like this method. I'm going to click it back to tick. It's going to cue off of this 150 right there. You might be saying, well, what would a 2-minute higher time frame look like on a 333 tick chart? Well, you can go up here and do it. Go take a look at it. Let's go up here. Let's go to a 2-minute time frame. Let's take a look. There's 2 minutes. So you might like to mix and match like that. It's up to you. Completely up to you. Concept. The most important thing is you understand the concept we're talking about. And the concept here is isolating the higher lows and lower highs. All right, we're going to go back to a higher time frame tick chart, 999. All right, there we go. Show the high-low plot. If you select this, this is going to show you what causes the bars to change color. So those are the plots. That's what causes these things to change. So if you really like this method and you wanted to trade it and you're like, yeah, but I don't know where to enter at. Well, you can use the high-low plots to stage sell stop orders. You can come right down below the sell stop here on this first pullback, put a sell stop in below it, and then get triggered in on this bar. You come here and you can put a sell stop in. Maybe you want to trail you want to get in on the second tick here, sell stop there. There you go. Or pull back, first trend, you come up here and you get in and you're trailing your buy stop in up here, so you're in there. It's up to you. You got the tools to work this, to make it your own. You only need one setup to make it. And these patterns repeat all day long. And you don't need to monitor 5 different markets. You just need one market. I mean, that last eval I passed, I call it gunslinging, but I'm just really trading. I'm trading over leveraged. That's why I call it gunslinging. But I'm trading the higher lows and lower highs. And I think I traded 4 days in that 50K account to get on this last one that I passed in 4 days. And, I was just taking the trades. I don't keep track of how well or how bad I'm doing. If I blow one, I blow one because I'm over leveraged and taking a wild shot that ran against me. But most of the time, this method here, you can have those outsized gains in. So that's another feature in there for you to take a look at. We also have the arrows built in. So hopefully when we start tweaking this model here in a bullish trend, like when the center line is green, you will only see the green up arrows. You will not see the red. When this center line is red, you will only see the red arrows. That's what we're striving for. But we don't have time to do that right now. We've got other things that we're trying to roll out by end of March. Another feature that Richard baked in here was, a look at the bid ask, the spread. So you can take a look at that. It's plotted over here on the right. It's just another feature that you can take a look at. You may like the plot. So here is a long-term, it's what we call our momentum line. So again, you may only want to take trades when the long-term momentum is in a downtrend. Right here, everything comes into alignment. Actually, yeah, right there, right there, right there. Everything's in alignment, like 2 or 3 spots. And here on the upswing, you've got, pardon me, this is the part where we didn't have very good cumulative delta. But you got the idea. Red momentum. Everything else is red. Right position. Cumulative delta. you're waiting, you get one trade. I mean, that's, what is that, 20, 40? Yeah, that's 40 handles right there to the downside. I mean, surely you could take 20 out of that, out of a move like that. If I'm trading evals to pass, I'm using this method here. You can shade the background. If you shade it, I just recommend all above or below. And you can shade just the panel or the entire chart. And what triggers that? Whenever the center line for the current chart crosses above or below the higher time frame. Remember, this is the higher time frame line. The outside is the boundary of the cloud. So this is the higher time frame. Okay, so you can paint the background if you want to. Tick count. So 333, this just tells me how many ticks, where we are in the scheme of things relative to my 333 tick chart. It's about to flip over right now. Boom. You know, I haven't even used those aspects yet. There we go. So it's going to show you relative to your tick size there. So bam, there you go. 33 of 333. Pretty neat. Some neat stuff. The rest of this doesn't matter. You know, when you're loading the indicator up. So that's the CentreLine indicator and some of the really neat features Richard has built in there. Now let's take a look at the cumulative delta as it pertains to our chart here. So we have a chart of NQ up, and right off the bat, you can see I've got micro data selected and we're selecting MNQ. And the reason for that is the MNQ has almost 3 times the volume as the NQ. And the cumulative delta is much more stable in MNQ than it is NQ. So this is why we have this feature. The slow period pertains to this thick line. I do not show the fast line on this model because I'm only looking at the thick line. But if you wanted to show it, there it is. We're going to deselect it. Now you have the option here to show the center line, but you don't have to check it because you're already showing it from the actual center line indicator. Now you can shade the background. You can shade the panel if you want to as a quick visual to let you know what cumulative delta is telling you. Because again, we're looking for alignments in here. Like, perfect example. Nothing cherry picked here. Just look, green, a pullback, red bar pullback, and a green uptrend. Double stochastics, lower end of its range. A chance for you to take a shot. If you don't know where to put the buy in, you can plot the high-low activator and stage a buy stop, above the first tick. It's a technique. You can show signal arrows if you prefer to do that. And the signal arrows pop up on the chart. The signal arrows, you're like, well, wait a minute, that doesn't match anything. What the signal arrows represent are the fast above slow and fast below slow. So you can see fast went above slow here on cumulative delta. There's the arrow. So those arrows are there if you want to use those. And the cumulative delta is applied to the 330 tick chart or your current chart. Now I put a VWAP in on mine because I want to see the actual VWAP. So we have this in the third-party indicator channel. It's available. This is also inside of the CentreLine zip file. You have everything inside that zip file. I'm going to show you that at the end. But this VWAP is available there. Now the next thing is, and I don't change anything in the VWAP other than do I color out anything? Let me see. Yeah, I make all these transparent. That's the only thing that I think I do there. I make everything transparent except the actual VWAP. All right, let's take a look at the double stochastics. I leave these set for default. I don't change any of that. It's default settings. It's tied to the current chart, which is whatever you have in the window here. That's what it's tuned to. And I don't make any other changes to this. It's default all the way for me. So no changes at all. Now let's look at the bottom picker panel. Again, default settings, I don't change. I never have changed any of those. The only thing I do is I make my first signal and deeper signal, the first stretch mode and the deeper stretch mode, I change those to lime and dark green so that I can see that. And that's what that looks like there. So that's a bottom picker signal in a downtrend, which I do not follow at all. But that's just what it looks like on the bar. Now we use the bottom picker panel. We also have a bottom picker indicator, but it's better just to use the panel. And I'm glad Richard went this route. It took me a couple of months to get used to just looking at the panel, because after about 15 years of looking at the indicator, it's hard to get weaned off of that. But he built a panel here to conserve screen space, and I really like it. And I've migrated to that exclusively on our NinjaTrader platforms. So that's why we use the bottom picker panel here. So that's the only thing I changed there. Now, what I do is I don't want to see the top picking components, so I make these the same color as the panel color. And that way, if there's any top picker signals, I just don't have the experience using the top picking component of this the way I do the bottom picking component. I know the bottom picker component works when you use it in context with a trend. I mean, I've used it forever like that. It's one of the best bottom picking identifying tools I've ever seen. And everybody that's been in here a while knows about the story where I paid, over $12,000 for a top and bottom picker out out in Vegas, and I used it for about a week. And fortunately, didn't risk any real money, or otherwise I would have spent a lot more than 12,000. But that's all I changed there. Now, here's the most important thing about this is understanding the concept that you need to trade the bottom picker. If your current chart is 333 and you are trying to trade bottom picking components on that, it's got to be in the context of a lower time frame trend. It's how the effectiveness of the bottom picker goes up significantly when you use this in context of trend. And we talked about it before. So it's why right here, wow, I stretched that thing out like stretch on a whatever that Marvel Comics hero is. It's why we have the second data set here. And we tie the bottom picker to that 100 tick chart, which is a lower time frame than, it's I'll say 1.5 to 2 times lower time frame than this, but it works good in this on this time frame here. So it's tied to that lower time frame so that all of these bottom picker signals are synchronized to a higher time frame bullish pullback. That's what we want to this is what we want to see in a bullish market. A place where the market has stretched far enough where it's objectively measured every time, and this tool does that. Now, does it work every time? No. But inside the trend, especially the first one, the first pullback, that's when you stand a chance for getting really good trade location. So that's the only thing. If you're using one chart for multiple time frames, you're going to need to add a second data set and tie the bottom picker to that lowest time frame. You're like, well, why don't you do it to a 150 tick, since that's what you're moving? It doesn't. The 150 tick, it's really hard to. I'm just telling you that this works right here. It's not black and white. I can't tell you if you run a 333 tick, you need to have a 79 tick bottom picking thing. If you move to a 2-minute, you need to have a 49-second bottom picking. I can't tell you that. I can just give you the concept and tell you how I tune this. Give you some guidelines so that you could build your own for whatever time frame. Big B, let me go back to some questions here before I get into the final stretch. Are your settings on bar close? CentreLine. Price change. Cumulative delta on each tick. Stochastics on price change. Bottom picker panel on bar close. That's how they're set up. That's how it works well for me like that. I don't think I ever changed those settings on any of those. I don't mess with them at all. So, all right, let's see. Uh, I haven't. Takoa, are you in the room? Did that template, when I downloaded that to you to try, I can't remember. Did it work perfectly when you uploaded it? If you're in the room right now listening, or did you have to manipulate it? See, the thing is um, I don't know if that second data set, if that carries over. I don't know if it does or not. What you do have a template for, if you go up here into the NT8 templates and you go to the CentreLine and GHL color bars, you have a zip file in there. Everything that's inside of this this is what's inside of that zip file. It's the point of control, it's the center line, it's the cumulative delta, the GHL color bars PDF, the cumulative delta PDF, the Gemify order line decorator, the actual XML file, double stochastics, and the VWAP. So you have everything in there except the second data set in the bottom picker panel. Trying to see if Takoa's in the room. I tried to do a test run with him to download that, and I don't think it went well because of that second data set. So for right now, until I can, yeah, that's what I was afraid of, Pope, is that it's not going to transfer over. Yeah, I appreciate that. That was my thought, and I think that's the problem Pope had. I mean, not Pope, but Takoa, and he's pretty savvy on the stuff. So the dry run didn't work. So basically, you could build this just by adding the centerline, double stochastics, cumulative delta, and then just go in there and add a second data set. If you want to add a third data set, that's how you do it. I'm going to remove that, but that's how you add the second. You click OK, and then you're going to come back in your indicators and you find the bottom picker panel, and you're going to make sure that that bottom picker is tuned, selected to that 100 tick chart. Now there's one final thing that you have to do when you do this chart right here, and that's why right now I can't put a template together, because it's easier to build it on your own. And when you select that data set, here's what I do. I make the candle body outline transparent. I make the candle wick transparent. Color for down bars transparent. Color for up bars transparent. Because it's going to go in panel number 3. And right now, all of those price bars are actually in here. You just can't see them. This is where the 100 tick bars actually reside, but you just can't see them. So I have the pane collapsed all the way down to where all I see is just the bottom picker panel. So I have other videos up there on how to the step-by-step to build this two data series template, but you could go back and watch this video and do the same thing. You could just put layer on layer in there. Should take you like 3 minutes to build it on your own. But that's the concept of the CentreLine method. All right, let's see. I'm going to put a trade in right here if we get a down close. Starting to trickle up above. Now, that's going to conclude our session today. Just drop me a line.